Yeah, you tweeted and you said you're irresponsibly long on Bitcoin. So I guess this is your main investment in the cryptocurrencies, or is it like 80% Bitcoin and the rest is Ethereum or something else?
Yeah, it moves around a bit, but I'm probably 60% Bitcoin, 30% Ethereum,
Okay.
and 10% a bunch of others, 10 others that I chose a basket of.
Alt season is coming, or we're already in it. So you expect another 4-year cycle on Bitcoin, or you expect a super cycle like Dan Held said, that we go straight up to $1 million a Bitcoin? Or do you think we will see something similar to 2017, that we will see a peak this year, like perhaps October or December, and then we see a correction again, 80% or 50%?
Who the hell knows? I can't.
That's why I invited you.
I can't see an environment where it peaks early. I think the risk is actually skewed to the upside. Mm-hmm. So if I say what's underpriced, I think what's underpriced is 400,000 to 1 million is underpriced. Cheers. I think if you see Plan B recently put out a Twitter poll, yeah, I think most people are somewhere between 150 and 250. So usually the crowd is wrong. Mm. Knowing what we know about institutional adoption and this whole digital world that's developing, yeah, it puts the probability that the upside is larger than people think. And it's unlikely to be the downside where the most risk lies. Maybe the next cycle, that it would maybe disappoint to the downside, while the further out the alts and will do much better. That's how I'm kind of thinking of it. So I kind of think the 400 to 1 million range is underpriced in this.
Yeah, definitely. That's what I think. What's your exit strategy? Do you plan to, for example, if it reaches $1.2 million, do you plan to sell 25% of your Bitcoins or of your crypto assets?
Yeah, because look, I always say this is, we can have our crypto chips and we can have our lifestyle chips. It depends where you are in the life cycle and what you wanted from your lifestyle. So, whether you want to buy a new car or buy a new house or do whatever it is, right? Yeah. You need some money in the fiat world to be able to afford the standard of living that you have. Then it becomes difficult to think about, because we saw CZ from Binance going through this, and a few friends of mine have gone through this. They sell a chunk and then they think, where do I put that money?
Yeah, exactly. You've got
it's not about the fear of, it's not really the fear about the banking system. It's like, you know what, if I just put it in USDC, I'm getting 6% yield. Mm. Why would I even bother putting it back in? So I've thought about that. And then I've thought about, would I just give it to some people to manage? Because the down cycle is more complicated. So trend following systems-based funds in crypto, I think will do quite well. Yeah. But there's also this token NFT revolution going on that requires a lot of deep dive work. I'd love to give some people money to manage that part that I'm just never going to be able to know all the details of. So it's kind of somewhere between some lifestyle tokens, maybe just keeping it outside of the normal world because it kind of starts to make sense more than it ever did. And then also figuring out, okay, what's the best investment for the change in the cycle? And then, yes, then there's those other bets that we talked about that can be more equity market bets. But, again, we need to judge them against, are they going to outperform the value of holding the currency? So you've got to beat the 6% hurdle for a start, which is what you get on USDC. But, will it outperform to the upside versus Bitcoin? So I think it will over time, but now's not the time. Now's the time to take that super concentrated risk that most of us have got, which is like, this is a once in a lifetime. Well, one of the few times in a lifetime opportunity.
It is. It's the biggest chance of all times. That's what my book is called. And I think if you, act right now and wise and invest into the right assets, you will be the big winner in this transformation. So do you expect a Bitcoin standard actually? So like Safedin says, like we will one day have a Bitcoin standard?
The answer is I don't know, and it doesn't matter because it's a long time between here and there.
Yeah.
I think that the chances of it being used as the premier or pristine collateral for the financial system, I would say is reasonably high odds over time. Will it be used as the reserve for the overall system? Possible, not clear. Will it be used as money for everybody? There's a much lower probability. Because gold never got used as money. There's theories that certain of these kind of laws apply, where Gresham's law, where suddenly all money goes to the hardest money. Well, it's never worked in the past. It's not going to work in the future, because governments and other people with different incentives change the incentives for everybody else. So I don't think so. I think it's a very multi-digital asset world. I think Bitcoin is a core, or the core component of it, but it is not everything. It's impossible to be everything. It makes no sense.
It's a store of value.
It's a fantastic store of value. It could be a money. Yeah. It could be a form of money. All of those have a probability, but I don't ascribe such high probability as people who are more maximalistic in their approach would do. And I understand their point of view, but I don't think we even need to play that now. I tweeted out today a chart of Ethereum versus Bitcoin since inception.
Yeah.
And, there's an argument that all tokens versus Bitcoin go to zero. Well, Ethereum's outperformed since its inception by 250%.
Yeah.
So we don't know. We don't know, and we can't know.
Yeah. Yeah, I think altcoins and Ethereum in special will outperform Bitcoin this year. Definitely. It's like the same like in 2017, but then it will drop hard as well again. So it's always the same game, I guess. We will see if it's a new cycle. But I want to step back to another topic, demographics, because a couple of years ago, I watched a video you made, and it was mind-blowing. I think it was the best video. You really nailed it on this video in the topic about demographics. I definitely will put a link in the show notes, because it's a must watch. And it's called The Coming Retirement Crisis Explained, and you just nailed it so perfectly beautiful. So I watched it like 15 times or something. So and you still look young, actually. You look the same like back then. So hey, what's your secret, Raoul?
Living in the Caribbean island.
Okay, I'm coming. Okay, so please explain to anyone who never considered demographics, why is it actually the big elephant in the room?
It's fascinating. Again, there's a lot of talk about inflation, and there's so many narratives get built up. And a lot of people say end of the gold standard created inflation and it's just coming around the corner. Well, I've basically made a career out of betting it's not coming around the corner. And why? Why was the 70s such a unique period? That's what started me on this demographic journey. And I realized that what we had in the 70s was the wages went up, as well as the cost of goods. That's pretty rare, and not up a little bit, up a lot. Why? Well, the largest group of people in history got born after World War II, and they all started work at the same time. They all had kids at the same time. They all got married at the same time. They all bought houses at the same time. So this was a massive bulge of people that never existed, all did the same thing at the same time. Once you understand that, you can follow that group of people through their life cycle, and you understand pretty much everything. So they all turned around 30 years old in the late 70s, early 80s. So 30 is the kind of magic age where people start buying houses, getting married, doing all that shit. So obviously the price of goods exploded. And and those guys originally, as they came into the workforce after World War II, they were able to price wages up as goods, because this new bulge bracket of people created new demand. But then what happened is their wages from 1975 onwards never went up again in real terms. Why? Obviously, because the labor supply was saturated by baby boomers competing with each other, and then technology and globalization, all that other stuff. So then you look at, okay, what happens in the 80s? Well, this is when these guys start getting some money, and it starts going into the stock market. And that's the rise of that. Then the 90s is when they start thinking about retirement. the rise of the index fund, the 401k, all of this stuff. Then it starts going through to why did German or European interest rates go to zero faster than anywhere else? Same as Japan, because the population was older, and they switched fixed income into fixed income. So it drives everything. That's why the cost of money has gone down. It's not because the central bank is abnormally pricing money. It's because the baby boomers shift all of their assets into fixed income over time and shun equity, because equity has higher risk. Only the US is different because it's a higher risk-seeking culture, and their pension systems are now so underwater that the only answer they can do is take more risk.